This is the Asia Trade. I'm Haidi Stroud-Watts in Sydney.
And I'm Shery in Tokyo. The top stories this hour. U.S. Treasuries rise across the curve as a weak factory reading fuels bets the Fed will have room to cut rates this year. Asian stocks set for a lower open. Also ahead, we're live in New Delhi from India's official election results, with investors already cheering a third term for Prime Minister Modi. And we hear exclusively from Tokyo Governor Yuriko Koike about handling yen weakness, inflation, and an influx of tourists.
That inflation outlook key for Korea as well, and the Bank of Korea. We do get South Korea's CPI just crossing the Bloomberg, actually falling a little bit more than expectations. CPI year on year, the reading coming in at 2.7%. Estimates were for about a 2.8% gain from a year earlier. The sort of broader outlook is a pretty significant slowing from the prior reading of 2.9%. Month on month, a little bit of a gain of just 1/10%. It has fallen from that mid-2022 peak of 6.3%, but there are still some supply side issues that could drag out that process. In all likelihood, the Bank of Korea will need more evidence, then that may result to be confident that it is getting closer to that 2% inflation target. So Bloomberg Economics seeing that there's sufficient progress that's been made by the start of the third quarter that we could start seeing easing from the BOK in August. All right, this is a setup, as Shery mentioned, looking pretty muted. In fact, Asian stocks are poised mostly for weakness as we get into the start of trading. That factory activity data in the US really seeing some repricing of these Fed cut expectations, and all of this is playing through to not much of a handover here. Sydney futures looking like we'll see a pretty flat start to trading of about 0.1% to the upside perhaps. Chicago Nikkei futures also looking very muted there as well. Take a look at US futures, because it was really the Fed repricing and the data that we saw, not just when it comes to factory activity, output also pretty close to stagnating here. So we are seeing that story as being the big rise across treasuries, right across the curve, and that focus on the bond market's sudden ascent after that bout of weaker data, just adding to some more of that chatter as to what we expect from the US Central Bank. Shery.
And Haidi, of course, will continue to watch Indian markets. Let's get to today's agenda, because it's really about that official election result coming out of India after 6 weeks of voting. A resounding victory for Prime Minister Modi expected at this point, and we saw stocks really rallying to those record highs.
Yeah, and taking a look at one of the other stories that we're following, the software update gone on rise, sparking the NYSE trading halt we saw to the tune of 99% drops. Right? So market volatility is really is really front and center as we saw those big moves. This was a glitch during a software update early on Monday. The New York Stock Exchange erroneously halting trading on about 40 stocks. Very odd rates being at play there, Shery.
Yeah, really a lot to discuss, and those key themes will be in focus here at the S&P Dow Jones Indices annual Japan ETF conference. Of course, you mentioned the volatility. We have also seen the geopolitics playing out, and what that really means for people to try to diversify their portfolios and what really the trend is at the moment. Let's bring in our first guest here at the conference, who sees a growing interest in U.S. equities among global investors. Joining us now is Fiona Bowl, Global Head of Equities at S&P Dow Jones Indices. Fiona, great to have you this morning here in the Tokyo conference. So tell us a little bit about what you're seeing, because we have seen that U.S. exceptionalism narrative play out for quite some time. Is that still ongoing?
Well, we know how important the US equity market is. It makes up about 60% of the global market cap. So those investors that are not invested in the US equity market are really missing out on being able to express their views in a highly liquid, highly transparent market. So far this year, the S&P 500, the bellwether for the US market, is up an impressive 11%. And we've seen growing interest in non-US investors diversifying their portfolios, including US equities.
Where else would they go after the U.S. markets, especially given the incredible rally that we've already seen?
So we've seen real interest in overall developed market equities. So the S&P World, which looks at developed markets, is up a similar amount this year. It's heavily weighted to the US, but also has a large exposure to Japan. And so we're seeing investors look to a broad, diversified, developed market, but also look at other strategies, whether that be an equal weight strategy in the US market, or maybe even trying to play sectors in looking into the US election.
I want to get to the U.S. election and the risks around that. But here in Japan, we have seen that corporate governance narrative play out for quite some time. How important is that for a sustainable rally from here on out?
It's certainly one component of why we've seen a really impressive rally in Japanese equities. We've obviously got, a depreciating yen. We've got the first signs of inflation. We've got economic stability. And we've got improvements in governance, whether that be around the cost of capital or really taking more care of shareholder value. So it's certainly one part of the broader picture here in the Japanese equity market.
And the Japan success story, Fiona, has kind of expanded beyond its borders, right? We've seen optimism when it comes to Korea, maybe seeing a similar success. Are you seeing other markets benefit from that optimism?
I think, Japan really has led the way. We've seen, reasonable performance in Korea, similar in China, although there are other issues there. And outside of the Asia Pacific, really strength in any of the bigger developed markets.
And of course, Shery might speak a little bit more about the yen weakness, but overall, how have you seen currencies really play into some of the flows?
The currencies have an enormous impact on flows, and particularly when we see, currencies like the yen or the Korean won at such extreme ends of the scale. And so, they have a big impact on how investors look at where they're putting their money, but also when they're looking at how they're constructing their portfolios, and the impact of those lower values really can drag down sometimes their performance in local currency.
Fiona, AI is obviously front and centre. It's been one of the reasons why we've seen almost singularly the outperformance of US stocks. Do you see that as being a major driver, and does that sort of widen the breadth of flows that you see across other markets, not just in the United States?
It's definitely one of the main thematics that we see and in the US, but also outside of the US market. If you look at the concentration in the S&P 500, the top 5 components there accounting for about 26% of the overall market cap. So we're definitely seeing the impact in the bigger markets. We expect that thematic to continue, and there are various ways that market participants can look at playing that, not just in the US.
And on that US political theme and the presidential elections coming up, how are investors really focusing on this issue and starting to trade the campaign?
Well, it's such a fascinating year. We've had elections across the globe, and as you said, we'll get the final results from India today, and we just roll on until we get to the end of the year where we have the US election. We know in the past that investors have looked at sectors to play different themes in the election, to look at how different candidates are going to or say they're going to deal with different issues. So whether that be investors looking at sectors like infrastructure or technology or playing consumer staples based on how they think the US economy will fare during and after the election.
What's interesting this time around is that we've actually seen the tenures of both presidents, right? President Biden and former President Trump as well. How did investors deal with the markets during those times? And what are the expectations right now of what could happen next year?
So we do see in the past that investors look at the sectors. So while the S&P 500 itself maybe won't change, we have history that says it doesn't necessarily change all that much during the election, we look at the dispersion within sectors, and that can change enormously. As you said, we've seen both of these candidates before, and so we assume that investors will be looking really closely at that to try and get a gauge for what we might see come November.
Annabelle, thank you so much for joining us at this early here in Tokyo at the S&P Dow Jones Indices Conference. I was the global head of equities at S&P Dow Jones Indices. And of course, we'll have more from this conference. This is the annual Japan ETF conference. I will be joined by CEO Dan Draper exclusively in the next hour, Haidi.
But first, India. Shery is preparing to count the votes in the world's biggest election. Our live report from New Delhi is next. This is Bloomberg.
India decides. As the votes come in, can Prime Minister Modi win a third term? And what direction will India take next? With a focus on the economy, social divisions, and climate change actions that will influence the global story. Bloomberg's Haslinda Amin is live in Delhi, bringing you the latest updates as election results from the world's largest democracy are revealed. Coverage continues today on Bloomberg Television. Context changes everything.
Well, official vote counting will begin in a few hours in India after exit polls signalled a third-term victory for Prime Minister Narendra Modi. Our Bloomberg Markets Asia co-anchor Haslinda Amin joins us now from New Delhi and so tell us about, it's a daunting prospect in terms of the counting. What are we expecting?
Well, the counting starts at 8 a.m. local time, and actually results are expected in just several hours, perhaps even 11 or 12 later today. And that's because voting was digital, is expediting the process, even though when you take a look at the eligible voters, we're talking about almost 1 billion people. Now, several states in focus as we talk about this vote counting. One of them is Gujarat, of course. This is the home state of Modi himself, 26 seats up for grabs, and at the last election in 2019, the BJP secured all 26 seats. Also in focus, Uttar Pradesh. This is the most populous state, 80 seats at stake, and at the last election, BJP secured 62 seats. Now, this state is very important if you want to win the overall election. Another case in point, the southern states. Remember that when it comes to what Modi himself is after, he's after a supermajority, that is 400 seats. That means he needs to win the southern states, and that includes the states of Tamil Nadu. Traditionally, they've voted for the opposition because they're non-Hindu speaking and they're against Modi's nationalist policies as well as nationalist narratives. And of course, we have the state of Maharashtra. This is the wild card because traditional alliances have broken down. So these are the broad states that we're looking out for. Of course, exit polls suggesting that Modi has had a landslide victory. It remains to be seen whether he gets the 400 seats that he is after.
So, Haslinda, we know that Modi faced an opposition alliance of more than 20 parties. So how badly did they fare, and what are the implications for policy making for Prime Minister Modi?
Well, in terms of the opposition, it's been pretty lackluster. In fact, until this election, they were quite in disarray. It took this election for the 20 parties to come together, led by Congress Party. Remember, Congress pretty much led post-independence India, but it's been settled with a lot of corruption scandals and perhaps a lack of what's been called visionary policies, unlike Modi himself. So Modi and the BJP party front and center when it comes to policies that Modi is expected to adopt if and when he wins. Well, this is a country that's been growing at 8%. Modi wants it to be a middle-income country by 2040. That means 9% growth for the next 20 years. Ambitious, yes, but Modi says he does have a plan. If you take a look at his infrastructure spending plan, $500 billion, that could lift India to 9% growth. But that growth needs to be more equal. Right now, income disparity is at the widest in about 12 years, and he needs to do better than that.
Bloomberg Markets Asia anchor Haslinda Amin there in New Delhi. Taking a look at some of the other top geopolitical stories we're tracking today, Israeli Prime Minister Benjamin Netanyahu has repeated there will be no permanent ceasefire in the war against Hamas in Gaza until Israel's conditions are met. But he says Israel is willing to pause hostilities for the sake of hostages. President Biden last week proposed a three-phase peace plan, which included a temporary truce and an eventual permanent ceasefire. South Korea is moving to suspend a border agreement with North Korea after Pyongyang sent nearly 1,000 rubbish-filled balloons into the south. The 2018 agreement was aimed at reducing military tensions, but Pyongyang declared last year it was withdrawing. Seoul's decision will allow its troops to resume drills near the military demarcation line that divides the two Koreas. You can get a roundup of today's top stories on the terminal. Subscribers can get to Debut Go. It's also available on the mobile in the Bloomberg Anywhere app. This is Bloomberg.
This is the Asia trade. A glitch during a software update early Monday led the New York Stock Exchange to wrongly halt trading on about 40 stocks and display odd trades, which included a 99% drop in Warren Buffett's Berkshire Hathaway. The disruption is the third episode to hit U.S. markets in the past week. Let's get more from Bloomberg's Jess Menton. Jess, anytime we hear about technical glitches, our mind goes to potential cyber attacks. Do we have any indication right now what happened?
So what we have seen so far, and to put into context, this is the third glitch that we've seen in about a week, but actually this was driven because of CTA, so that's the Consolidated Tape Association. It's a subsidiary of the New York Stock Exchange, so it actually oversees the dissemination of real-time trades and quote information. So there was a glitch there when you are looking at a software update, and so because of that, for about 45 minutes at the New York Stock Exchange, there were about 40 different symbols of those. Some of the most popular ones obviously was Berkshire Hathaway, and I'll be more specific with that one. It's Class A shares. Usually when people are trading it, it's typically the Class B shares, as you know. But this one in particular, when you see a stock like that drop pretty dramatically, and then Chipotle was another name, as well as Barrick Gold, it did. Because of the erroneous glitches there were erroneous halts with those 40 different symbols too, but it ended up being resolved. So the New York Stock Exchange is blaming this on the CTA that does disseminate its real-time information.
Jess, we had a similar confusing episode back in 2023, start of 2023, right? So is there any suggestion that there needs to be better processes in place to stop the repetition of these episodes?
Right, and I covered that one at the beginning of last year as well. What's a little bit more unique in this particular situation, so you saw some individual stocks where the information was displaying differently, but it didn't actually impact, for as far as what we know so far, individual trading of those stocks. And last week was another instance where you had the S&P 500 and the NASDAQ 100 early Thursday morning. If you looked at in the morning, they didn't tick for over an hour, so it had 1041 on both of those indexes, but still traders were actually able to still execute orders and have those individual trades. So with this one, it seems as it was more of a display type issue rather than people executing those trades. But obviously we just went through the T plus where people are trying to obviously close those types of trades on a one-day basis rather than two. So there are some questions as far as when it comes to trying to rectify that, and then obviously money changing hands with these types of trades. What does that move moving forward? But the New York Stock Exchange did say when it comes to Berkshire stock that they will, as far as what happened with those trades because of the stock, that's not something that will necessarily go through because of what happened, but they are still investigating some of the other names that were with these individual stocks as well.
Bloomberg's Jess Menton covering what was really a chaotic start to the week there for the New York Stock Exchange. Well, Qualcomm CEO says the partnership with Microsoft on its AI-focused PCs will make history and be as significant to the industry as Windows 95. As Qualcomm tries to diversify its revenue sources away from mobile chips, Cristiano Amon told us why he is bullish about consumer products built on its new AI semiconductors.
So people are going to be able not only have the best performance, not only have the AI use case, not having a very small and thin laptop, but they're going to have battery life for everything they need to do. You're going to leave your charger at home.
Cristiano, from one technology nerd to another, when grandmothers all around the world go to the store and buy their first AI PC, and they take it home and they try to plug in their printer, will it work?
Of course it will. So one of the things that it's important to understand the journey that we have been on Microsoft is it's a fundamental shift from Microsoft changing Windows from x86 to an ARM instruction set, and it's changing to an AI PC. And part of what we have been doing is to bring the ecosystem along. It's not only the printers, it's not only the docking station, also the games. We've been working with Microsoft to have the top 1,200 games optimized on the platform, and it's really about the future of the Windows ecosystem. So the thing to think about it is not only you'll be able to work with an old printer, but you'll be able to do things you were not able to do before with your old PC.
Cristiano, we recognize the following that Snapdragon X Elite has. You can go on any social media platform, I see it. But Intel still sort of dominates the traditional sales channels for PC. They've got their name on all the shelves. You know, Qualcomm's in a different part of its history, but do you think you can take them on those sales channels, the marketing spend, the R&D, where they're quite entrenched?
Okay, so on the R&D, I beg to differ. I think the performance leadership now is clearly within the Windows ecosystem, and it's clearly with X Elite. Just looking on the CPU performance, Orion's custom CPU developed by Qualcomm's the fastest CPU out there for any personal computing, and then the NPU and the AI engine, it's only possible on a Qualcomm platform. So I do beg to differ on the R&D, but let's just talk about the big question, which is it's a new market, it's a new channel for Qualcomm, and I'll tell you what is different this time. There are two aspects. One aspect is consumers are more savvy, and consumers actually come from a phone. Actually, your most important purchase decision, I will think today, is your smartphone, and you have a lot of knowledge coming from the phone. So Snapdragon is not something new to you. But the most important thing is actually not that. What the most important thing, when you usually see the incumbency position on PC, is at the enterprise. But the enterprise actually has us and Microsoft 100% aligned. Usually enterprises have been slower to adopt a new version of Windows, but Microsoft actually is doing a great job with enterprises around the world to get them to embrace the Copilot and the Copilot Plus. So that's a big tailwind that Microsoft is driving the enterprises into the future of AI PC. That's great news for Qualcomm, and that builds on the incredible platform with the Snapdragon X Elite.
Qualcomm CEO Cristiano Amon speaking to Bloomberg's Ed Latlow. And my conversation still ahead with Tokyo Governor Yuriko Koike. We spoke about the benefits of a weaker yen. Of course, we have seen the influx of foreign arrivals to Japan, but also how a cheaper yen is making import costs more expensive and making it a little bit more difficult for Tokyo citizens when it comes to higher living costs. Our exclusive interview is next. This is Bloomberg.
This is the Asia Trade, 30 minutes out from the major market opens. Here are the top stories you need to know. India is set to begin counting votes in a few hours, with investors already cheering a third-term victory for Prime Minister Narendra Modi. Exit polls have predicted a landslide victory for the ruling party, the BJP, and its allies. US Treasury yields sinking as weak factory activity fuels speculation the Fed will have room to cut interest rates this year. The central bank has indicated the timing of its next move will depend on data, with Friday's US jobs report the next big focus. The New York Stock Exchange is cancelling bad trades and reviewing others after a software update glitch sparked trading halts and odd trades in some companies, including Berkshire Hathaway. The disruption is a third to hit US markets in the past week and has since been resolved. Shery.
Heidi, take a look at how the yen is trading at the moment. Really not doing much, but after declining against the U.S. dollar and touching a low that we haven't seen in about 2 weeks. More of a function of U.S. dollar strength, given that we saw the ISM manufacturing data disappointing to the downside and expectations that the Fed might have to move. But really, suffice it to say that we're still at around historic lows, so much so that we saw Japan really intervening in the markets with a record amount of more than $62 billion in the past month. Now, the weaker yen has fueled a surge in tourism here in Japan. Local wages, though, are struggling to keep up with a broader rise in costs. I sat down for an exclusive interview with Tokyo Governor Yuriko Koike and asked whether the city is able to handle the pressure from its influx of visitors.
Well, it's a good pressure. In March of this year, for the first time since statistics began, the number of visitors to Japan exceeded 3 million. And travel expenditures within Japan reached 1.8 trillion yen, which means 11.4 billion US dollars only for the January and March period of this year, and quarterly record high. And having overcome the pandemic, inbound demand is indeed recovering. And from the perspective, the weak yen has been a positive factor. And Tokyo was even ranked as the world's top tourist destination in the Traveler's Choice Award, Best of the Best. Yes.
Are you concerned about Tokyo citizens that also have to face higher costs of living? What should policymakers do?
Well, on the other hand, Tokyo, as you mentioned, that Tokyo residents have been feeling the little pressure of the weak yen and prolonged increase in commodity prices, as you pointed out. And until now, TMG has been taking prolonged measures, including safety net support, as well as efforts to promote wage increases and price shifting. And in the year of fiscal year of 2024 budget, the largest ever with a project cost of 161.9 billion yen, which is about 1 billion US dollar. And the TMG is enhancing its countermeasures against to protect Tokyo's residents and businesses.
We've been speaking for many years, and during all of that time, you really have that goal of making Tokyo a global financial hub. It's been challenging. One recent ranking by the Global Financial Centers Index puts Tokyo not only behind Hong Kong and Singapore, but also behind Beijing and Seoul. What's been the issue?
We are trying to catch up and to renew our system. And since 2017, the Tokyo Metropolitan Government has been implementing various measures under the Global Financial City Tokyo Vision 2.0, which is made up of three core pillars. One, making Tokyo a leading city for sustainable finance, a city where global startups are born, and a city with a global standard for business in English. I think English is also very important.
Many more people speak English these days.
Yes.
I noticed.
So this February, to help achieve the Japanese government's vision of a leading asset management center, Tokyo announced itself as a special zone for finance and asset management businesses. And at the end of last month, just a few days ago, I attended a meeting regarding the special zone system at the Prime Minister's office, where I explained the TMG's vision, initiatives, and requests for the national government. And so, making best use of the special zone status, Tokyo will attract more global funds and human resources, technology, and information to become a sustainable city that serves as the Asian hub for innovation and finance.
If you were to have another term, what would you like to accomplish? I mean, you just told me a laundry list of so many things that you still have to do for Tokyo.
Well, of course, I did my best effort to do my best effort to make Tokyo great again. And so last 8 years, I did my best to do that. So it's a sort of city is a sort of human beings born and raised and educated, and so the city is always moving and developing. So what I did during my period, 8 years, I did my best, and also, well, I tackled the pandemic, as you know, and under the pandemic, Tokyo has hosted Olympic and Paralympic Games, and it was so successful thanks to many people.
That was a Tokyo Governor Yuriko Koike there speaking to Shery earlier. Take a look at some of the corporate headlines that we're following. An activist investor, Bill Ackman's wealth has hit $8 billion after a group of investors put $1 billion into its hedge fund for a 10% stake. That valuation makes Pershing Square one of the most highly valued hedge funds in Bloomberg's index. It's also the first time Ackman has appeared in Bloomberg's ranking of the wealthiest 500 individuals. US private equity giant KKR is considering entering the private credit market in Japan. The company says it wants to provide an alternative to bank loans, since most direct lending efforts for Japanese companies have been done overseas. In addition to private credit, Japan is also the destination for about 40% of KKR's investment in Asia. Bloomberg has learned that Chevron has halted LNG production at part of a key LNG export facility in Australia. The Gorgon plant had only resumed full output last Friday following maintenance during most of May. The potential production slowdown comes with European gas supplies at risk after an outage at a processing plant in Norway. Take a look at how the Asia last close for LNG is trading at the minute. And of course, there are a number of supply issues. And we just spoke about that key section of LNG export facility capacity in Australia being halted on Monday. So this is just one of the extra tightening effects that we see, along with that pipeline issue in Norway. We see some protests when it comes to Canadian pipelines there as well. Also watching crude there as we continue to see downside pressure. OPEC's surprise plan to raise output adding to that doom, and the alliance is planning to start unwinding supply cuts as soon as October. Futures really capping that monthly decline in May on demand concerns, but we are seeing that tumble and that bearish momentum starting to build and consolidate after the last few months as well. Also watching iron ore. We're seeing a little bit of an uptick when it comes to trading in Singapore, but this after, of course, we saw iron ore tumbling to the lowest in about 6 weeks. These China demand concerns continuing to be revived, worries over the outlook, which of course has been hammered by this protracted property crisis, despite a number of policy measures still coming through from China's leaders. Well, coming up, Australia's home rental prices have surged amid a critical shortage in vacancies and record immigration. We get some analysis from REA Group next. This is Bloomberg. Surging immigration and a shortage of housing in Australia is driving rental costs to record highs. While Sydney remains the most expensive city to rent at home, the rate of increase has also been the steepest in the West Australian capital of Perth. This report from Bloomberg's Paul Allen.
Another day, another open house for Papawal Valubanda. Finding a place to live in Perth for his young family is becoming a soul-crushing experience.
When it is coming to this rental crisis, it's very hurt.
More than 100 hopefuls have been shown through this modest two-bedroom apartment in Victoria Park on the edge of Perth's city centre. Despite earning more than $100,000 as an electrical engineer with mining giant Rio Tinto, Papawal's just one of many in the same situation.
Once the house visit has opened, immediately I'll go back to the house, and to be in the front in the queue, I will apply to that house and checking for the Gmail every time whether I got any information, whether my application got selected or something. 1 week or later, that I got an email stating that your application got unsuccessful.
For real estate agents, it's one of the most undersupplied markets they've ever seen.
people on very high incomes, excellent rental histories. You'd have no problem putting in your property. They cannot be housed. They're putting in applications, being knocked back. So yeah, there's a serious undersupply of rental property in Perth at the moment.
Australia's resources giants in gas and iron ore have a heavy presence here in Perth, and when commodities prices are strong, more people arrive, and that's when the rental market really feels the squeeze. According to the Bureau of Statistics, just over 13,000 new dwellings were built in Perth in the past financial year. In the meantime, the population grew by 87,000. Sydney is still the most expensive place in Australia for housing. Median rent there, 750 Australian dollars per week. But as its population has grown, Perth rents have risen faster than anywhere else, increasing more than 18% in the year to March. The solution is obvious, it's just not very fast. Build more homes. The state government has committed $1.7 billion to addressing the housing shortage and has just broken ground on this inner-city build-to-rent project intended to provide 200 apartments. A small and slow step towards addressing a daunting and immediate problem. Paul Allen, Bloomberg, Perth.
Let's get some more insights now on Australia's property market. Joining us in the Sydney studio is Eleanor Craig, who's a senior economist at REA Group. And of course, you know, in domestic media, it's almost fever pitch when you talk about the rental crisis here. Has this been kind of a build-up of structural issues, or is there one thing in particular that stands out to you as to why we're seeing this now?
No, I think that's a really good question, and we know that these crisis conditions have really gripped the nation's rental markets for a couple of years now, and it really is a multitude of factors that have driven us to this point. So we know we've got very strong demand to rent at the moment, of course bolstered by those net migration gains, the surge in student arrivals, but at the same time we've got a very tight supply of properties available to rent, and that's pushing vacancy rates to record low levels. So Perth, we've just heard about rental markets incredibly tight, vacancy rates hovering around 1%, which is really indicative of crisis conditions. In those conditions, it will be very difficult for many to find an available rental. So really, really challenging conditions. Rental affordability is at its worst point in at least 2 decades. And when we look at that kind of bigger picture environment as to how we got here, supply is the critical issue. We know we're facing into a chronic shortage of housing that is driving both rents and home prices higher.
Are there any easy answers or good answers at this point?
Again, a really good question. But when it comes to kind of easy answers, I don't think there's any silver bullet that's going to fix these crisis conditions in the rental market, and of course the severe deterioration in housing affordability that we're seeing in the market to buy as well. There's not really a silver bullet answer. There's a number of factors that we know can help ease rental market constraints, so certainly investing more in the build-to-rent sector. That can help add to the available pool of long-term rentals. We know that better utilising our existing housing supply is another factor as well. So encouraging downsizing, encouraging better use of our millions of spare bedrooms that are available. But of course, really, the only sustainable and long-term fix is increasing the supply of available housing. And of course that takes time, and we know that the construction industry at the moment is facing capacity constraints. Materials costs have surged more than 30% on pandemic levels. There's still labour shortages, higher financing costs. I mean, it's literally and figuratively harder to get projects off the ground.
Given all of those reasons that you mentioned, Eleanor, we're seeing now high-income people rent out these places. What does that tell you about the broader issue at hand when it comes to the structure of the housing market there?
So you're exactly right. We're seeing this increase in higher income households in the rental market, which of course is posing critical issues for lower income households, for really whom no rentals are affordable at the moment. So around 1 in 100 rentals are affordable for a low income household if they were to be spending 25% of their pre-tax income on rent, which is really, really indicative of pretty disastrous conditions. low-income households being forced to compete with higher-income households in the rental market is indicative of a broader structural issue at play. In terms of, we know that housing affordability has deteriorated significantly in Australia, housing affordability at its worst point in at least 3 decades now. So a median income household can only afford 13% of properties sold across the country. You know, with this deterioration in housing affordability, we're seeing that those higher income households, it's taking them longer to purchase a home. And of course, more and more households are being forced into the rental market. And those higher income households are now competing with lower income households who really can't compete.
How much of this is a concern for the RBA? Because we see time and time again in the inflation print that rental cost is one of the stickiest elements.
It's a very tricky situation for the Reserve Bank at the moment, I think. We know that home prices, rental prices are not really within their mandate, but certainly to the extent that this housing shortage is continuing to fuel ever higher home prices and higher rents, that is feeding into inflation and promoting those longer lasting or stickier inflation dynamic. Certainly when it comes to inflation overall, we are expecting that broad trend is expected to continue in terms of inflation moving lower over the months ahead. But of course, this increase or this surge in rental prices that we've seen in recent years. So in Perth and regional WA, rental prices up around 80% on pre-pandemic levels. Nationally, rental prices up more than 40% on pre-pandemic levels. And although we're seeing the pace of rental price growth moderate, we're not seeing that supply response that we really need in order to significantly ease rental price growth. So we are expecting that strong rental price growth is going to continue to feed into inflation pressures.
What's the best way for investor exposure? I mean, short of obviously buying real estate.
I mean, look, we are seeing that in terms of investor exposure, investors are becoming more active in the Australian housing market. It makes sense, right? We know that rental yields have recovered off those pandemic lows, and certainly investor activity is becoming particularly prevalent in those markets where rental price growth is more extreme and where rental vacancies are much lower. So Brisbane, Adelaide and Perth, in each of those markets, rental vacancies are sitting around the 1% level. That means properties are renting out very quickly, competition is pretty tight, and rental price growth remains strong in all of those markets, which are creating attractive conditions for investors at the moment.
Eleanor, great to see you as always. Eleanor Craig, who's a senior economist at REA Group. You can catch up on past interviews and watch us live on TV Go. That's our interactive TV function. You can also dive into any of the securities or the Bloomberg functions we talk about. You can join in on the conversation as well. Send us instant messages during our shows. Do check it out. It's at TV Go. This is Bloomberg.
Take a look at how GameStop shares surged in the U.S. session, up about 21%. We have seen Keith Gill's Reddit account showing 140 million position in GameStop. So we are seeing it's still down more than 70% from that 2021 intraday peak. But we want to get to this story because it seems the business of betting on stocks declines on Wall Street is shrinking. Some of the biggest names in short selling, including Jim Chanos, have been pulling back or getting out of the game altogether. For more on today's big take, let's bring in our cross-asset reporter, Denitsa Tsekova in New York. Denitsa, so what happened with this stock?
Yeah, if we look at short selling across the market, across the growth of the industry, it's really been shrinking. For example, if you look at the S&P 500, the typical stock has 1.7% short interest, which is around the lowest in more than 20 years. If we look at the short selling hedge fund industry, that has really shrunk and is at around 4 billion from a much bigger peak. We saw some of the biggest names, Jim Chanos converting his hedge fund into a family office. We spoke to, of course, Andrew Left, who called short sellers like him a dying breed. Jim Chanos himself wasn't quite optimistic about the industry and said it's really hard to raise capital. We've had Carson Block start his first long-only fund. So that's quite emblematic of all the challenges that industry is facing. And what we're seeing is assets are shrinking, returns have been shaky. There have been quite a few years with negative returns. And investors have just been less inclined to allocate to those strategies as the S&P 500 has been reaching newer and newer gains. And you can imagine allocating to tech companies has been a very good bet. So it's harder to promote those strategies, for example, to pension funds and bigger institutional investors.
Exactly. This GameStop frenzy again. What's this really telling us about? What's this really telling us about how investors, retail investors, how important they've become in the markets?
They become very important, especially for short sellers. 2021 was one of the most difficult years for short sellers because on top of worrying about companies suing them, on top of worrying about regulators banning them, they had to start worrying about people on Reddit squeezing their short positions. And now is the perfect time to talk about it. We saw what's happening with GameStop today. We saw what was happening earlier in May. And they're definitely a big force. We saw, for example, Andrew Left just said he has a new short position. He is one of the names who got called into GameStop the last time the positions got squeezed. A lot of short sellers triggered. There were hedge funds closed. It was a big trauma for short sellers. And a lot of losses. That said, short sellers have started adjusting, but it has been harder to short those names, and they have definitely stayed away from most of them, that's for sure.
Our cross-asset reporter, Denitsa, took over there in New York. Take a look at some of the stocks we're watching. We're just, about 4.5 minutes out from the start of trading in Korea, Japan and Australia at the top of the hour. ANA is one in focus, telling Bloomberg it's considering new wide-body and single-aisle jet orders as it doubles down on international expansion. Also watching automakers with that Toyota news. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. And Shery, it is all about the bond markets that are sent when it comes to treasuries right across the curve being replicated here in Asia. That's sort of taking the wind out of some of the enthusiasm for equities, and certainly was not much of a handover for the Asia markets.
Yeah, we're seeing the implications for the currency markets as well, as we saw that U.S. dollar really take a plummet and other currencies starting to gain ground. We'll be discussing all of this here in Tokyo, where we're at the S&P Dow Jones Indices Japan ETF conference. And as we continue to see those risks around the markets, what it means for diversification.
Yeah, and what a time to be talking about Japan risk assets right this as we question what the next leg will be when it comes to this Japanese equity rally. We are actually looking like a little bit of positivity when it comes to at least trading for Japanese bonds at the moment. But equity markets are looking like we're seeing a little bit of downside pressure there already. But of course, Treasury is rising across the curve on Monday. That factory activity data really causing some repricing as to when the first bout of easing could come from the Fed. That sort of passed through to a pretty muted session for US equities, and that's a handover we have here in Asia as well. Dollar yen actually holding pretty steady at about that 156 level, and watching, of course, bond yields across Asia as well. Take a look at the start of trading for Korea, and this is the picture for the Kospi as well as the Kosdaq. Pretty muted trading for tech stocks overnight there. Of course, we had the disruptions when it comes to the New York Stock Exchange with some of those errors to be watching for as well. But the Kospi is off by just about 0.5%. The Kosdaq just holding holding its head above water. And here in Australia are some of these concerns over where the RBA goes from here, where money markets are pricing in some risk of a rate rise in August. We had some of the comments about the predominant challenge of inflation from the Deputy Governor Andrew Hauser earlier this week. That's still at play. We're seeing equities looking a little bit softer in the start of the staggered session. The Aussie dollar, though, had put on about 0.5%, with the US dollar falling against all but one of its G10 peers. Let's bring our next guest, Mizuho Securities Asia Managing Director Sean Darby, who joins us now from Hong Kong. So, Sean, this session is very much about bond markets, but how much are you looking at the US data, the factory activity data, the stagnant sort of output levels that we're seeing, and does that feed through to easier Fed expectations?
Well, certainly the manufacturing data was disappointing, although it's hasn't been necessarily as strong as some of the other developed world markets, and certainly very much weaker than emerging markets. But you need to remember that the US is a service-based economy, and if you look at, for example, the Atlanta wage Fed tracker, it's still well above 4.4% year on year, and that's way, way higher than we had during the pre-COVID times. So I don't think necessarily that data alone is going to signal that the Fed is going to be on an easing path by itself. I think really what you need to see is actually credit market spreads start to widen in anticipation of a slowing economy, and also capital markets weakening as they begin to see an earnings disappointment. So neither of those are actually apparent at the moment. So I think maybe this is another one of those false dawns for the rate cut enthusiasts.
And much of Asia remains kind of on the wait for what the Fed will do, right? Does that make sort of international a little bit more appealing, given perhaps with the lack of breadth that you see in US markets?
Well, maybe the way to play things is not in the rate market, but in actual currencies. I mean, the dollar in terms of its nominal exchange rate value is near record highs, and certainly on a real effective exchange rate, it's very close to its highs. And if you look at currencies in Asia, like the Taiwanese dollar or the Japanese yen or the Malaysian ringgit, they offer very, very strong upside given their relative performance over the last 3 years. And all three of these economies are generating current account surpluses. So maybe the way to play things in a slow-moving rate market is through the exchange rates, which seem very well, Asia seems very well placed in that respect.
So you're no longer worried about, I guess,
Sean, the Korean
supersized levels of volatility that we might get for Asian currencies. I mean, implied vol when it comes to Asia FX is a bit higher at the moment.
So where we have seen pressure on exchange rates in terms of weakening, and places like, for example, Indonesia had to raise rates, and of course Korea has had to sort of defer its rate cutting expectations. Most of this has been due to worries that a weak exchange rate would bring in imported inflation into these economies. Ironically, their foreign exchange reserves are holding very steady. So these are more technical aspects for the central banks in managing their exchange rates, and they've been ultra prudent and very, very conservative. And again, that lends itself to some really good absolute returns for equity markets in this region, as we start to see some enthusiasm for picking up currencies rather than rates as we come nearer to the end of the tightening cycle in the US, and as I said, start to move to a more easing bias.
Sean, we've seen the Korean won being one of the big laggards across Asia this year, but at the same time, the trade surplus seems to have recovered, with exports now gaining, about 12% in the last reading year on year. Are we going to see a recovery in that market, and what would you bet on when it comes to stocks as well?
Well, it's been very fortunate that Korea's biggest trading partner, which is China, has started to see its own economic cycle re-expand since the beginning of the year. So that's been good news for the broader-based export market in Korea. Export prices have been growing in year-on-year terms, which is generally good for the KOSPI. Perhaps the most lackluster feature for Korea actually is consumption. And you have to bear in mind that we have had real rates moving back towards zero. And again, wage increases in Korea have nowhere near been as exciting as you've seen in some of the other parts of the world. So the missing link really in Korea is that the banks are not necessarily going to do very much with a very flat yield curve, and consumption trends have been very, very lackluster in comparison to what you've seen, as I said, in the developed world and in other parts of Asia.
How exciting is Japan at the moment? I mean, we're at this S&P Dow Jones Indices conference, and everybody seems to be focusing on the corporate restructuring that we've seen, the corporate governance and improvement when it comes to Japan. Is this sustainable?
Well, it is. I mean, you were talking earlier on about the weakness in the US manufacturing data and expectations growing of a rate cut in Japan. Japanese break-even inflation expectations are close to record highs on the 10-year. So a very, very different cycle is emanating in Japan, where you get the recognition of corporate governance improvements, which has been an ongoing feature for the last 5 or 6 years, combined with a change in the inflation temperature, which is generally very good for nominal profits. And of course, you have an exceptionally weak yen. So you're going to get a steep yield curve in Japan, which is great news for equity markets. And also, if you look at the topics in terms of valuation, it's not anywhere as expensive when compared to the United States. So I think Japan has probably still got room to be one of the best performers this year.
Is there a point when the yen becomes too weak and it becomes a problem? I mean, we were speaking to Paul Krugman yesterday, and he seemed to think that it was an overall positive thing for the broader economy.
Well, I think there's not really too much risk of a destabilizing problem for Japan in terms of a weaker yen. It's the imported inflation that's more of a worry. Remember, Japan runs a current account surplus, and that in itself is a buffer in terms of making the yen perhaps a little less susceptible to big swings. Perhaps the biggest risk, the longer-term risk, is that it forces the other regional currencies into some form of devaluation war, and notably that the risk must be for the RMB, which needs to depreciate to get some inflation back into China. So paradoxically, it may not be the biggest risk, may not be necessary for the domestic economy in Japan, which is, as I said, got imported inflation. It may be the broader role in which the yen plays in destabilizing some of the North Asian currencies.
Sean, always great to chat with you. Sean Darby, Managing Director at Mizuho Securities Asia. Take a look. We're just about under 10 minutes into the start of trading. These are some of the companies and stocks that we're watching as a result of some of the news flow. ANA is considering fresh jet orders amid their international expansion plans. They're evaluating both new wide-body and single-aisle jet orders. It's doubling down on that international growth path, the core of their strategy. And this is, of course, Japan's biggest carrier that we're seeing unchanged at the moment. The automakers are front and centre. Toyota halting sales of 3 models of its cars. The safety scandal continues to deepen there. The Transport Ministry in Japan to conduct an on-site investigation on Tuesday. We're seeing car makers as well as their suppliers being investigated after scandals at some of these Toyota units. 3 were manufactured by Toyota. There was another 3 models of vehicles involved as well. The faulty data during pedestrian safety tests was submitted for 3 current models, including 2 Corolla models and a Yaris Cross as well. So we continue to watch the impact on that. Mazda, the only outperformer there in terms of those automakers in Japan. Shery.
And Haidi is still ahead. We'll be speaking exclusively to S&P Dow Jones Indices CEO Dan Draper. We're live at their annual Japan ETF conference here in Tokyo. But first, India set to announce official election results as markets already cheer a third-term victory for Prime Minister Modi. We're live to New Delhi next. This is Bloomberg.
India decides. As the votes come in, can Prime Minister Modi win a 3rd term? And what direction will India take next? with a focus on the economy, social divisions, and climate change actions that will influence the global story. Bloomberg's Haslinda Amin is live in Delhi, bringing you the latest updates as election results from the world's largest democracy are revealed. Coverage continues today on Bloomberg Television. Context changes everything.
You're watching the Asia Trade. Official vote counting will begin in a few hours in India after exit polls signaled a third-term victory for Prime Minister Narendra Modi. Bloomberg Markets Asia anchor Haslinda Amin joins us live from New Delhi. Haslinda, we saw Indian stocks reach record highs, so it seems that investors are taking this as a given. What should we be watching out for today?
Well, it is a big day for India. Counting begins at 8 a.m. local time. Results expected in just a number of hours. Quite a feat for a country with about 1 billion eligible voters. Of course, it's been digital, so that's expediting the process. Now, what's at stake? 543 seats. You just need a simple majority. By that, we mean 272 seats. Now, some states are being watched for in particular. We have Gujarat, of course. This is Modi's hometown, home state. 60 seats up for grabs. And at the last election, Modi's BJP party secured all the seats. Also, Uttar Pradesh, this is the most populous state. 80 seats up for grabs at the last election. We had BJP securing 67. You have to win Uttar Pradesh if you want to win this election in particular. And of course, we have the southern states here. We're talking about Tamil Nadu. They have traditionally voted the opposition, and that's because they've been pushing back on BJP's pretty much Hindu nationalist policies. And one more state that we're looking out for, Maharashtra. We have traditional alliances falling through, so it is pretty much the wild card. It is up for grabs. As far as Modi's concerned, he has declared a win on the back of that exit polls that you mentioned, Shery. We're expecting, or rather they're expecting, BJP and its allies to win 350 seats. And we went to the BJP headquarters just yesterday to get a sense of the mood at the headquarters. And of course, they were preparing for celebrations. They were putting up buntings, colors of green and orange, the colors of the party, pretty much everywhere. So they're waiting to celebrate. We know that Modi is expected to make his way to the HQ at about 6:30 p.m. He'll be making a speech addressing his supporters, tens of thousands expected to be there. So we'll bring you the color and what he says later on.
Modi's been looking for a supermajority. What's worked in his favour?
Well, actually, Modi himself, they call it the Modi cult and the Modi vision and the Modi plan. Remember, this is the man that's taken India to 8% GDP growth, the fastest growing economy among the G20 nations. He has a vision as well. Remember, when he started campaigning 10 years ago, when he ran for office 10 years ago, he provided hope. In 2019, at that election, he provided a vision of growth and now a vision for the future. He wants India to be a middle-income state by 2047. And that means growing at 9% for the next 20 years. Ambitious? Yes, but Modi says he has a plan, and he crisscrossed the country during the campaign period, and he explained his vision, pretty much got the hearts and minds of the people. So Modi front and center at this election. He is the most popular leader in India, and if he does win, he would be the longest running Prime Minister since Nehru, who governed for 17 years.
He faced an opposition alliance of more than 20 parties. How did they do, and what are the implications for policy making in India?
Well, when it comes to the opposition, they've rejected the exit polls. They say they themselves can garner 292 seats. That would mean they would have a majority. But the opposition parties have been lackluster, and until this particular election, they were pretty much divided. Remember that they've come under one umbrella, under India, that's what they're calling themselves, is being led by the Congress party, but Congress has been saddled by corruption scandals, and people say that it's lacked the vision that Modi and the BJP have had. So they're under a lot of pressure to perform, and we have to wait and see what transpires and whether or not they've managed to sway the hearts and minds of the people.
Bloomberg Markets Asia anchor Hazinder Aminder in New Delhi, and we'll have more analysis coming up on India's election outcome. Shevnadar University and Edelweiss Mutual Fund joining us later today at those times on your screen. You can also turn to your Bloomberg for more analysis on this. TLIV Go is where that commentary is from Bloomberg's team of expert editors. Shery.
And Haidi, here's the top geopolitical stories today. Israeli Prime Minister Benjamin Netanyahu has repeated that there will be no permanent ceasefire in the war against Hamas in Gaza until Israel's conditions are met. But he says Israel is willing to pause hostilities for the sake of hostages. President Biden last week proposed a three-phase peace plan, which included a temporary truce and eventual permanent ceasefire. South Korea is moving to suspend a border agreement with North Korea after Pyongyang sent nearly 1,000 rubbish-filled balloons into the south. The 2018 agreement was aimed at reducing military tensions, but Pyongyang declared last year it was withdrawing. Seoul's decision will allow its troops to resume drills near the military demarcation line that divides the two Koreas. We have more ahead on the Asia trade. This is Bloomberg. Take a look at how Japanese automakers are trading at the moment. We're seeing broad downside pressure across the Nikkei. Right now, we're seeing a little bit of a mixed picture when it comes to those car makers. But of course, we're watching very closely the suspension of delivery and sale of 6 vehicle models across Japan as a safety scandal escalates. The Transport Ministry says Toyota, Honda, and Mazda are among 5 car makers that falsified or manipulated certification data. For more, let's bring in senior editor Reed Stevenson in Tokyo. Reed, so how damaging are these allegations, and what do we know at this point?
Well, essentially, a few months ago, we thought this was all over. Toyota chairman Akio Toyoda, held a press conference saying, the company was going to go back to basics and really take a look and right itself. And then just a few months later, we've got sort of a widening scandal. Now, in terms of the shares, we haven't really seen a huge reaction. Honda does seem to be the worst hit, as you mentioned. Toyota is down, right around 1.4%. But obviously, what's going to happen now is this raid, both at Toyota's headquarters and Mazda and Honda as well. And, that's also a perception problem that they're going to have to deal with. Now, the issue here, of course, is certification. So we're not talking about actual defects or something that's going to lead to a recall. And to a certain extent, you might even also ask the question, are the standards too high because the cars are safely on the roads? But it's essentially a perception problem and something that at this point, we don't know how much further it's going to go. We thought it was over, and now we're still seeing this kind of news trickle out.
Yeah, so in terms of reputational damage, Reed, can it be contained at this point?
That's hard to say. We thought it was contained a few months ago, but now we're back here talking about this. At this point, I would guess, don't be surprised if you see more news like this, which is going to kind of cast a negative sentiment over the automakers and potentially their stock. But also, investors have been bidding up Toyota shares, quite significantly this year, mainly because the cars are selling well. Most of the cars are selling well. And in fact, this is more of a sort of a Japanese certification issue specific to the market here, as opposed to the actual safety of the vehicles. Actually, 11 million sold by Toyota alone last year on the roads.
So, Reid, what are the implications then for the broader industry, whether it's for automakers or suppliers, but at the same time, perhaps the certification process in itself?
Well, the implication, especially for the suppliers, is that as Toyota and others are ordered to halt some of their production lines, there is going to be an impact on the suppliers because they're not going to get paid while production is halted. In fact, Mazda's CEO, Mr. Moro, said yesterday that they would cover those costs for the suppliers and at least keep them sort of insulated against some of these issues. And I wouldn't be surprised if Toyota took some similar measures to keep their supplier network kind of going along. In fact, they've done this before, and it's critical once they get back on track and try to keep production going at similar levels.
Bloomberg senior editor Reid Stevenson there. Taking a look at some of the other corporate headlines that we're tracking, and activist investor Bill Ackman's wealth has hit $8 billion after a group of investors put $1 billion into his hedge fund for a 10% stake. The valuation makes Pershing Square one of the most highly valued hedge funds in Bloomberg's index. It's also the first time that Ackman has appeared in Bloomberg's ranking of the world's 500 wealthiest individuals. US private equity giant KKR is considering entering the private credit market in Japan. The company says it wants to provide an alternative to bank loans since most direct lending efforts for Japanese companies have been done overseas. In addition to private credit, Japan is also the destination for about 40% of KKR's investment in Asia. Bloomberg has learned that Chevron has halted LNG production at part of a key LNG export facility in Australia. The Gorgon plant had only resumed full output last Friday following maintenance during most of May. The potential production slowdown comes with European gas supplies at risk after an outage at a processing plant in Norway. Taking a look at how we're setting up for the Open in the European session. Pretty lackluster lead from both the US session and here in Asia in the first sort of hour or so of trade here. Euro Stoxx 50 futures pointed a little bit lower there. We're also seeing further downside for German DAX futures, up by about 0.2%. We did see a pretty buoyant day in the previous session. European stocks gaining on that Monday session. Really a rebound from what has been a second straight weekly decline. A lot of investors potentially on the sidelines now as attention turns to that pivotal ECB meeting later on this week. We've seen the likes of construction, tech, telecoms outperforming, some weakness in health, but it does look like we're setting up for another day of lackluster trading. Some of that sentiment also fading from Asia's PMI numbers that were generally quite positive despite that rebound struggle in China. We do have more ahead on the Asia trade. This is Bloomberg. This is the Asia Trade, 30 minutes into the market open now. These are the top stories you need to know today. India set to begin counting votes in a few hours' time. Investors already cheering a third-term victory for Prime Minister Narendra Modi. Exit polls have predicted a landslide victory for the ruling party, the BJP, and its allies. US Treasury yields sinking as weak factory activity fuels speculation the Fed will have room to cut interest rates this year. The central bank has indicated the timing of its next move will depend on data, with Friday's US jobs report the next big focus. The New York Stock Exchange is cancelling bad trades and reviewing others after a software update glitch sparked trading halts and odd trades in some companies, including Berkshire Hathaway. The disruption is the third to hit US markets in the past week, but has since been resolved. Shery.
And Haidi, we're live today at the S&P Dow Jones Indices Japan ETF conference here in Tokyo, where investors are looking the growing importance of U.S. and global equities in Japanese portfolios and vice versa. Joining us now is Dan Draper, CEO at S&P Dow Jones Indices. Thank you so much for joining us today and having us here at your conference.
Welcome.
Let's talk a little bit about the first part of that sentence, which is the importance of U.S. and global equities in Japanese portfolios. Tell us a little bit about what sort of trends you're seeing this year. We know that this is an annual conference, your 16th so far.
It is. It's fantastic to be back in Tokyo. And as you said, this is our 16th year, and this is our biggest in terms of attendees and people who've signed up. So I think the interest level, both investing in Japan, but also Japanese investors, as you said, to look elsewhere for international investments. We've noticed, for example, in our S&P World Index over the last decade, the weighting of U.S. equities has grown from less than 50% of a world index to now 60%. So the concentration that we've heard about, but also the demand for U.S. equities has grown pretty substantially. And we're seeing that demand here in Japan.
Of course, a lot of that is to do with the tech behemoths,
yes,
right? And that concentration. So I guess it's really important more than ever for diversification in this story. So how does Japan play into that?
Well, Japan, through the market reforms, started, 7-8 years ago, which have moved forward now with changes in monetary policy. You've seen wage growth, more recently. So there's an optimism over the medium term for investing in Japan, and we've seen flows come here. And then domestically, you've seen significant reform for savers. The NISA plan, the Nippon Investment Savings Accounts, have grown and expanded. So I think both for domestic investors, but also for international, Japan is really top of many investors' lists right now.
We hear a lot of optimism when it comes to Japanese assets, especially when you're thinking about comparing it, say, perhaps with China, and then that diversification away from what's happening there. But at the same time, when it comes to the Japanese economy, there's a little bit of skepticism, I feel, now that I'm in Tokyo, about where the economy is headed from here, as Japanese people are having a harder time with a cheaper yen and higher costs of living. Are you seeing that divergence, and does that matter to investors who are looking globally on where to put their assets?
It does. I think the domestic economy, as you mentioned, seemed to be pulling out of the long-term deflationary trends. Obviously, more optimism to start the year, but then we've seen a little bit of a slowdown in the last couple of months. But I would say for Japanese companies, and you think about investing in equity prices, again, the reforms on governance that have been done. Also, many manufacturers in Japan have now offshored operations, so the currency is less of an impact for them, for example. So I think you've really now seen that, in addition to more confidence with better governance, proxy voting, and a little bit more transparency. And then more recently, you've had the stock exchange and others encouraging Japanese companies to be more efficient, more share buybacks, more consistent dividend policy. So returning capital to shareholders, who are more accustomed to that, say, for example, in the United States.
Dan, of course, some of the interest in these darling markets of Japan and India has come at the expense of China, right? I'm wondering, what are you hearing in terms of the interest and the potential flows into investors wanting some sort of exposure to China despite its ongoing troubles?
Yeah, we are seeing, obviously, there's been a rally this year, particularly in China, but we're seeing investors really searching kind of globally for diversification. As I mentioned earlier, there's been a very large concentration, these magnificent 7 names and indices like the S&P 500, which we have. So investors are looking for diversifying emerging markets, valuation-wise, tend to be more attractive in some cases. But right now, we continue to see the momentum focused on, for example, in the U.S., the Federal Reserve policy. And again, from an earnings perspective, you continue to see the large technology names, themes like generative AI, continue to dominate marketplaces. But I think those investors who can take perhaps more of a medium to longer term view are looking for emerging and other markets where perhaps valuations are more attractive.
What's next in terms of the strategy in the business, perhaps beyond core equity indices?
Yeah, well, S&P Global, who owns S&P Dow Jones Indices, purchased IHS Markit back in 2022, and that gave S&P Dow Jones Indices fixed income capabilities, so market-leading opportunities in credit, both investment grade as well as high yield, and particularly using that in certain customer segments like insurance, for example, which is a very important segment for us. Insurers now using instruments like ETFs more in their general accounts. And then also with higher interest rates in many parts of the world, being able to now use indices more in fixed annuities for the first time really in decade plus. So really starting to see the benefits, particularly of that merger, but offering multiple asset classes together for diversification benefits.
And Dan, of course, we know the Japanese pensions are huge market makers here across the world. What can you tell us in terms of your business partnerships and collaborations with asset managers locally?
Yeah, well, it really started with our partnership with JPX over 20 years ago. And then locally, we had a significant partnership start with GPIF, the world's largest pension fund and sovereign wealth fund, back in 2018, where we partnered on carbon efficient indices. So really bringing more of the sustainability story to this marketplace. And that partnership has grown. We've also, as you said, been able to then also leverage many of the local asset managers, brokerage houses in building local products. But particularly, they want to bring, say, the S&P 500 and different versions of that. So dividend-enhanced strategies have been very popular, with a stronger dollar as well, but also areas to diversify, like fixed income that we talked about. So I think the partnership is growing, but we're starting to see more demand, particularly as more even retail investors through the NISA programs are moving out of traditional, savings accounts now into investment portfolios. It's exciting.
Dan Draper, thank you so much for joining us today. He's the CEO at S&P Dow Jones Indices. And of course, thank you so much for having us at your conference here in Tokyo, the 16th annual Japan ETF conference. Now, we've been talking a lot about the optimism on the Japanese equity markets, but that rally may be losing a little bit of momentum. Still ahead, we'll tell you why some investors are having second thoughts about the country's stocks. This is Bloomberg. Take a look at how Asian markets are trading at the moment. We're seeing a little bit of downside pressure across the board as we see the Nikkei and the Kospi losing ground, almost 0.4% for Japanese stocks. This, of course, extending those declines that we saw in the previous session. And some of those automakers really taking a hit as that ongoing crisis of trust deepens with the findings of some of these car makers and their certification process. When it comes to the Kospi, is also on the downside, and the S&P 500, the ASX 200, really not doing much at the moment. But when it comes to the Japanese equity markets, investors seem to be having perhaps some second thoughts about buying more Japanese stocks at these current levels. Let's discuss this with Asia equities reporter Winnie Su. And Winnie, we are now seeing, of course, that rising bond yields dampening the dividend appeal of equities. Tell us a little bit more about what is the thinking among investors right now.
Right. So right now, it's very interesting. It's two things, right? So you're seeing the bond yields actually going up because of the more hawkish Bank of Japan thinking that they're going to raise rates earlier than expected. So that has really driven the 10-year benchmark to go up over that 1% key level. And on the other hand, you're actually seeing the dividend yields in Japan falling. And that's not because the yields are that's not because the dividend is actually going down. That's because you have actually companies pushing the dividend yields higher up because of the corporate governance reform. But the stock prices are actually rising, and that's why the bond yields are the yields of the stocks are coming down. So it puts cross-asset investors in the situation to consider maybe that bonds are actually more attractive, that bonds are starting to becoming more attractive when we're comparing the returns over stocks.
And what has been the impact on stocks then?
Right. So very interestingly, so far, right now, so until now, we're actually seeing that the rising bond yields are positive for Japanese financial stocks, and that's pushing the topics to go up. But just over the past year, we're seeing something to reverse because investors are now thinking that maybe they should put their money in bonds instead of stocks. So that's adding more pressure to already the range bound of Japanese stocks, as we're seeing kind of the negative impact of the higher for longer Fed rates and money flowing outside of Japan and into China. So and those negative factors weighing on Japanese stocks, that is likely to continue. And some analysts are saying that until the year end, we might actually see the Nikkei to struggle around the 38,000 to the 40,000, which is lower than the record high. So that kind of negative sentiment around stocks is something that investors are continuing to watch. However, when it comes to longer term, the attractiveness of stocks is actually still there because it's driven by more fundamental factors. So you have the corporate governance reform still ongoing. And some investors say that if Japan is actually exiting deflation and heading into inflation, that's going to be good for stocks over bonds because companies are able to raise the prices. So overall, when we look at Japanese stocks and bonds, we hear that a lot of investors still, for now, prefer stocks, especially considering that the Japanese bonds won't really rise as much.
Our Asia equities reporter, Winnie Su there. Take a look at energy markets at the moment, how we're trading across Brent and WTI. We're continuing to see that downside pressure of course, OPEC Plus unexpectedly rolling out that plan to restore some production to the market later on this year. It does kind of just add to the bearish momentum that we've seen for oil prices over the past couple of months or so, as some of the sort of geopolitical risks didn't really materialize, and that demand side, particularly when it comes to China, demand has been ebbing as well. So both Brent and New York traded crude coming under pressure at this point. Let's bring in for some analysis our senior energy reporter, Stephen Stepchinsky. And so, Stephen, this is kind of intriguing. Is OPEC basically throwing in the towel on its $100 a barrel oil kind of vision? Is this a strategic shift, a more of a tactical retreat? What do you make of this?
It might be kind of all of the above. You could read it sort of any way. I think in general, OPEC Plus is making sure that they're getting the market in a balanced sort of view. And they've done that for months, right? They truly do believe that the market will need more barrels to balance it. At the same time, you could also argue that the member states want to be pumping more. They want to be selling more. The $100 barrel is really something that Saudi Arabia, you could argue, was fighting for, but OPEC Plus is much more than just Saudi Arabia. So when you break down the deal, right, the OPEC Plus agreement over the weekend, you do have the curbs extending into the third quarter, but then after that, you do see that starting to unwind quite rapidly. So by the end of the year, they'll be pumping 500,000 barrels a day more. This time next year, it'll be about 1.8 million barrels a day more. So, as my colleague Javier Blas said from Bloomberg Opinion, adding more barrels to the market is bearish. It's not bullish. And that is going to push prices lower. And that's a reaction you're seeing, over the last few days with Brent oil, the global benchmark, below $80 for the first time in a while. And the idea of $100 not coming back. That all being said, OPEC Plus, they've got some of the best analysts. They're also looking at the market very carefully to see where things could be tighter. And they have made correct calls in the past. So this could be a preemptive move for them to see that the market could be tighter next year. But clearly, when the traders look at this, it does look to be a retreat to a degree, and it does look to be an admission that they're trying to get their market share back, especially from other producers like U.S. shale and U.S. exporters. So all of that together does appear to be pushing markets lower, and it is likely that it'll be hard for Brent to really rise back up into the high $80, $90 range again.
So how does China factor in here? Because we have also seen that huge LNG demand starting to cool off.
Right. So I think China's an interesting story. For the oil demand, their oil needs have been kind of not as robust as I think a lot of people were expecting at the beginning of the year. LNG, natural gas, a different kind of monster for China. For liquefied natural gas, they import it and they have to sell it at a set price in their domestic market. And right now, with global LNG markets tight because Russian gas to Europe has been reduced via pipelines significantly since the war in Ukraine, global LNG markets have gotten pricier over the last few weeks and months as well because of the hotter weather in South and Southeast Asia. So because LNG prices are higher, China is deciding not to take their LNG into the country where they would have to sell it at a lower price. Instead, their traders are being opportunistic and saying, hey, how can we sell this LNG into the spot market internationally, maybe to Asia, maybe to Europe, at a higher price. So China will be taking less of that LNG, and that will provide some relief for natural gas markets. I do have to say, though, overnight there was an outage at a Norwegian plant that boosted European gas prices as much as 13% at one point, but about 5% higher. And now Asian LNG prices are trading at the highest level so far this year. So altogether, it's an interesting kind of dynamic. Gas markets are getting tighter and increasingly tighter, whereas oppositely, you have oil, which is looking a bit looser.
Right, Steven Stupczynski there, our senior energy reporter. We have more on the Asia trade. This is Bloomberg. You're watching the Asia trade. The weaker yen has fueled a surge in tourism in Japan, but local wages are struggling to keep up with the broader rise in costs. I sat down for an exclusive interview with Tokyo Governor Yuriko Koike and asked whether the city is able to handle the pressure from its influx of visitors.
Well, it's a good pressure. In March of this year, for the first time since statistics began, the number of visitors to Japan exceeded 3 million, and travel expenditures within Japan reached 1.8 trillion yen, which means 11.4 billion US dollars only for the January and March period of this year, and quarterly record high. And having overcome the pandemic, inbound demand is indeed recovering. And from the perspective, the weak yen has been a positive factor. And Tokyo was even ranked as the world's top tourist destination in the Traveler's Choice Award, Best of the Best. Yes.
Are you concerned about Tokyo citizens that also have to face higher costs of living? What should policymakers do?
Well, on the other hand, Tokyo, as you mentioned, that Tokyo residents have been feeling the little pressure of the weak yen and prolonged increase in commodity prices, as you pointed out. And until now, TMG has been taking prolonged measures, including safety net support, as well as efforts to promote wage increases and price shifting. And in the year of fiscal year of 2024 budget, the largest ever with a project cost of 161.9 billion yen, which is about 1 billion US dollars. And the TMG is enhancing its countermeasures against to protect Tokyo's residents and businesses.
We've been speaking for many years, and during all of that time, you've really had that goal of making Tokyo a global financial hub. It's been challenging. One recent ranking by the Global Financial Centers Index puts Tokyo not only behind Hong Kong and Singapore, but also behind Beijing and Seoul. What's been the issue?
We are trying to catch up and to renew our system. And since 2017, the Tokyo Metropolitan Government has been implementing various measures under the Global Financial City Tokyo Vision 2.0, which is made up of three core pillars. One, making Tokyo a leading city for sustainable finance, a city where global startups are born, and a city with a global standard for business in English. I think English is also very important.
Many more people speak English these days,
yes.
I noticed.
So this February, to help achieve the Japanese government's vision of a leading asset management center, Tokyo announced itself as a special zone for finance and asset management businesses. And at the end of last month, just a few days ago, I attended a meeting regarding the special zone system at the Prime Minister's office, where I explained the TMG's vision, initiatives, and requests for the national government. And so, making best use of the special zone status, Tokyo will attract more global funds and human resources, technology, and information to become a sustainable city that serves as the Asian hub for innovation and finance.
If you were to have another term, what would you like to accomplish? I mean, you just told me a laundry list of so many things that you still have to do for Tokyo.
Well, of course, I did my best effort to make Tokyo great again. And so last 8 years, I did my best to do that. So it's a sort of city is a sort of human beings born and raised and educated, and so it's the city is always moving and developing. So what I did during my period, 8 years, I did my best, and also, I tackled the pandemic, as you know, and under the pandemic, Tokyo has hosted Olympic and Paralympic Games, and it was so successful thanks to many people.
That was the Tokyo Governor, Yuriko Koike, there speaking to Shery earlier. We're watching automakers at the moment as we have Toyota halting sales of 3 models as the safety scandal deepens. We're also hearing from the finance minister saying they're concerned about the cut in output on the economy.